Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swendlin and I am here with my father, Carl Swendlin from DecisionPoint.com. And we're going to look at the charts that we find really interesting right now, talk about some topics you might be interested in. We will also look at the sectors and we will jump right into your symbol requests after we cover the market in general. A few things to understand and know. The Q&A box is where you're going to put your symbol requests and questions for Carl and I. The chat box is for you. You can go in there and talk amongst yourselves, talk to other traders. Just be sure when you're in the chat room to use the drop-down menu above your comment to send it to everyone so that everyone gets it and not just panelists, because we don't read the chat box. I take a look at it after the program's over, but I don't monitor it. All right, I think that covers all of the housekeeping. I'm going to pass it over to you, Dad, and I know you had a couple topics you wanted to talk about.
Yes, indeed. Let's start with looking at the market in relation to the war in the Middle East. As we said last week, the market only cares about what affects it. It doesn't care about humanity at all. It just cares about, and you think about it when you make a trade, you're making the trade, you're taking a position based on whether you think it's going to work for you or not. And that's pretty much the way it turns out. This doesn't mean that Erin and I don't have opinions about the war, but that's not something we get into here. But just look at the market here. We've got all the market indexes are up. That's it. Bonds are up, good percent today. The dollar, gold, and USO, which is crude oil, are down. So this doesn't look like the market cares anything about that war right now, and it's certainly not worried about the price of oil. So let's go to my next subject. I wanted to talk about real estate, and I'm looking, see what I have here. Okay, here, the housing. First of all, here's the housing Homebuilders index, or ETF, and this is the weekly chart, and it's got a long-term double top, and it is headed down. This is a weekly chart. That to me means we're not going to see a lot of houses built. The problem that we had during the financial crisis back here 2008-ish is we had too much inventory. People, there was a lot of fraud, a lot of defaults, huge defaults, and so there was a lot of inventory on the market. But I'm trying to do a new share. Hold a sec. This time around, it's a little different. Here we have this is a table we carry in the weekly decision point alert, but showing how the increase in interest rate is really hurting the average home buyer. And here we hit the low in January of 2021. We were 2.65%. And for a $500,000 mortgage, payment of the principal and interest was $2,015. In order to maintain that amount of the payment, and we're basing that assumption that people generally buy a house based on the monthly payment. They don't look at the total cost, just the monthly payment. And on that basis, at 7.57%, the amount of mortgage they can carry is down almost 43% from the 500,000. If you look at what would happen if the mortgage rate, the mortgage amount stays the same. So in 2021, we've got the 2015 payment, and then at today's interest rates, the payment would be $35.20. That's principal and interest for the same amount of mortgage, $500,000. That is a 75% increase in the amount of payment. Now, I know some people can probably handle that, but that's not typical. And what we have now, we've got people who have houses they'd like to sell, but they're not going to lower the price in order to fit what the average person can do. That's not going to work. And obviously, there are a lot of permutations that can occur that people can buy a house, but based on what I would call the typical average person buying a house, they just can't. And so houses are not going on the market, and because they don't want to sell at today's prices or what they would be able to get. So they're still holding out. Prices, I thought prices were going to go down, but they haven't yet. But I don't see ultimately how it can not happen, but just waiting around to see how that works out. Changing the subject. So utility sector is being into some under pressure, but it is bouncing. But this weekend I looked up components of the XLU, and the largest holding is NextEra Energy. Now you can see that resembles the XLU chart quite a bit, but let's go to the weekly chart. And that doesn't look so good at all. That looks horrible. And if we go out even further using the monthly chart, here we've got basically a parabolic, and it's breaking down. Where would we go? Where could it go? Well, right here's an obvious level of support. Let's see how far down that would be. That's 55%. And let's see, I would say here's a possible destination right here. There's some support. You could see that's a 69% decline. Here's a 75% decline, and then down to here, which is theoretically the ultimate destination for a parabolic breakdown. But play it as you go. If you look at the PMO for the monthly, it's headed down. The weekly PMO headed down, and the daily, we've got some relief there. So there's a shot of getting in at this point, but looking at the longer term charts, I would say no. I think I'm going to drop that subject for now, and let's move on to the market, starting with the S&P 500 with the SPY ETF. Okay, let me get rid of this. We've got a top beneath the top, top beneath the top, top beneath the top. We've got a bottom beneath the bottom. So this is starting from July, we're in a downtrend. We have an attempt to get out of this downtrend here, but obviously it's got a ways to go before it can break loose and start something else. This is a good time for it to happen because we're coming to the end of the negative seasonality period. The 6-month seasonality period ends November 1st, and negative seasonality ends then. And so maybe that's what we're seeing. I saw, I'm trying to think of the name now, it slipped my mind, but Dennis Gartman this day, he is not long on anything, and he has got some short positions. So he didn't sound positive on market at all. And as we said, the war hasn't affected the market. And I think there's a lot more out there that working against the market than just the war. That's just something extra. Let's look at the bias assessment. We've got the Silver Cross Index, which is the percent of stocks in the S&P 500 that have a 20 EMA above the 50 EMA. We call that a silver cross when it crosses up through the 20, crosses up through the 50. 26% of the stocks are in that bullish configuration, only 26. We look at the Golden Cross Index, which shows the Golden Cross is the 50 EMA passing up through the 200 EMA. We're at 47%. That's slightly below our arbitrary bull market limit of 50%. So it is still falling. It takes a little bit of time for the Golden Cross Index to turn around. And so it looks a little promising here. What are we at below the? We've got 2605 and 2643. So the Silver Cross Index is still below its 10 EMA. Every week we participate in a poll of what we think the market is going to do in the next week. And these are the charts that I refer to when that's the last thing I do on Friday. And I look at these two charts, Swinland Trading Oscillator for breadth and volume, and intermediate term breadth, momentum, and volume momentum indicators. That's intermediate term, short term. And we've got topping here. These are Friday's readings, by the way. This is end of day. And we've got some, actually, we've got deceleration. The ITBM are still rising, but they're decelerating and could possibly top today. No, probably not, because unless the market gets weaker. Let's go to dollar.
So what did you do for your survey this week? You talked about it.
Yeah. Okay. I was bearish. I'm going based on the topping trading oscillators. I figured it's going to be bearish with this decelerating. But today is certainly not following.
No.
So,
I was in the neutral camp this week.
The dollar, we've got a top, a lower top. This is just short term, hard to say, but it's still in a rising trend since July low. So perhaps it is getting ready to turn, don't know. But with it being a week today, dollar should be up. The gold should be up, is what I meant. And it is not.
Wow.
If we look at this relative strength indicator here, this shows that since the beginning of October, gold has become stronger relative to the dollar. We assume if the dollar is up, the gold will be down an equal percentage amount without any other elements affecting it. But the gold here was in a downtrend, so it was weaker than it should have been. Now it is stronger than it should be. So potentially we're going to, this will persist for quite a while. Yeah, gold is looking very good. This is a continuous contract. It's not GLD, and it only updates on the end of day. But nice breakout here, and potentially could be getting through this declining tops line. Oil, we follow USO as a trading issue, and but we'd like to keep track of the dollar amount of crude, West Texas Intermediate crude, WTIC, and I think it's down today somewhat, but it's not changed a lot. So this is an end of day data set, whereas the USO is updating intraday. Moving along to Treasury bonds. This is the 20+ year Treasury bond. It is it's falling over. This is the 2020 high, and it's still in a falling trend. Slowed down a little bit, but it's broken support one more time. And my outlook on bonds long term is they're going down, but we will have rallies occasionally, and so just watch your step on that. Here's the 10-year Treasury yield. It's up today. We had a short-term parabolic, which usually will correct downward, and it has. It would be healthier if it went back to this rising trend line or some area of support that made sense, but it's still pretty jazzy, and it did correct somewhat, and it's headed higher again. So parabolic is less accelerated. Bitcoin acting crazy today. Let's look at the longer term chart. And I keep this up so we get an idea of where the support and resistance lines are. Here's a strong line of resistance, temporarily went above today. Here's a much, it's also a strong line of resistance. I'm thinking that ultimately it's going to head down lower, but it's, I would guess that today's spike is probably goosed along by the war, and so it may have some life that we don't expect normally. Let's go to the Magnificent Seven plus Tesla. Apple is down today, and it's in a downtrend, as you can clearly see. Amazon, it has a top below a top, but it still hasn't established a downtrend yet in the intermediate term. It is all, the last time I looked, all the Magnificent Seven were up today, except for Apple. And Apple has problems that are going to last for a while, I think, because they're trying to disengage from China and get set up in India. That's going to take a while. Google is still in a rising trend. Native platforms, double top here. So we can say it's, at this point, it's in a consolidation range, and it may find support right in this area again. Just guessing. Microsoft is in a downtrend. We have a top below a top below a top. Don't have a bottom below a, there is, technically speaking, it's slightly below this bottom, but we don't really have a good bottom below a bottom yet. Netflix is a downtrend. Nvidia up today, it has the top beneath the top, and what we're potentially looking at here, excuse me, is a potential head and shoulders pattern. And a bottom, a top below a top, and this bottom needs to be broken out. And there's the neckline right along there. So if this comes to fruition, we would look for a downside target that is equal to the top to the neckline. And so that would be down around 325 on NVIDIA. Tesla, it's a triangle formation. Still hasn't, it's got declining tops, but it's still not breaking the rising trend. And I think that pretty well covers. Let's see if we've got any questions first.
Right.
What are the best leading indicators? I don't think in terms of that. Erin, what do you say that?
The best leading indicators. I like stochastics. That's one of the better leading indicators for me. The PMO, you can make it a little faster than what we have. It makes it a little bit more of a leading indicator than it already is. But I'd say for me, stochastics is what I put on my chart to be more of a leading indicator. It usually does turn in one direction or the other pretty quick. So that would be my answer to that one.
Okay. Let's see. Lots of people made money in stock and crypto market left and right. You need to look at household net worth published by Federal Reserve. Is that all-time high? Even the stock market is not all-time high. Point is, people can pay higher interest rate. That's the point. I have no response to that.
Yeah. Yeah, it's going to be interesting how this all shakes out for sure. Let's see.
There was one request for me to, what request did I cover XLP? Consumer staples. Yes, it does look like it's bottoming out. If we draw a line along here, that is a declining tops line that would have to penetrate, and that line would intersect with the horizontal resistance line here. So that's a good spot where you could find resistance. You need to look at the silver cross and golden cross. And the silver cross is in the toilet for sure, 5.41. And very few stocks in a bullish intermediate configuration. Only 22% of stocks have a golden cross, which is the long-term bullish configuration. At this point, look for the silver cross to improve first, and possibility we have a PMO bottom, which is a good very short-term buy signal. But again, with it being so bad here, and so
the participation is weak. It doesn't even show enough stocks above the 20 and 50 to really get things going by a lot.
Yeah, and I think about this in a fundamental way, and I'm thinking, why? This is staples, not the. We're not talking about buying luxury cars. We're talking about buying those cornflakes.
Right.
Okay, I will turn it back over to you, dear.
Okay, sounds good. All right, so I'm going to do something a little different today. I get Seeking Alpha Wall Street Breakfast in my email, and the very first thing in today's email was a survey asking which U.S. brick and mortar retailer is likely to be the next to file for bankruptcy. I thought, wow, what an opener. And if I were part of one of these companies, wow, how would I feel about that? that everybody's betting on whether I'm going to file bankruptcy or not. I'm going to start a poll. So if you go ahead and Let's see if I can launch the poll. All right. So if you go to polls, you might be able to go ahead and make your own vote. But the 4 selections were Big Lots, BIG, Petco, Woof, Joann's Fabrics, which is Joan, Joan, and the Container Store. Looks like people are already taking the poll. I'll show you the results of our poll and the results of their poll. But I figured it would be kind of fun to look at those charts just to get a sense of, what we're looking at. These are companies that people are betting on bankruptcy. They're certainly not a problem today. I mean, we have some seriously high moves coming from 3 of the 4 of these. I'll give you my selection at the end as well. You can think about your choice, Dad. That would be it would be interesting to get your opinion too. All right.
None of these interest me at all.
I know. Well, I want to say, we're looking at these charts. These are not necessarily buys. They could possibly be shorts. And maybe in the short term, they are buys. But the main thing is that overall, I mean, the fact that people are betting on them to file bankruptcy is pretty crazy to me. All right, so Big Lots, short term, not looking too bad. You've got a PMO crossover buy signal, but when we're talking about a stock going into bankruptcy, we really need to look at those weekly and monthly charts. And if you look at the weekly chart for Big Lots, and
share your screen.
Oh, I guess that would help.
Yeah, that helped.
All right, let's try this again. There we go. All right. So here is a weekly chart of Big Lots. And as you can see, really very unhealthy. It's at lows, all-time lows, it looks like possibly. Let's look at the monthly chart. Yep, the monthly charts shows that we are at all-time lows here for Big Lots. So maybe you're looking at a decent daily chart, but knowing the fundamentals behind it, knowing that there are problems, certainly this would be considered in the trade department and not in the investment department. See, the other one that was up there was Joann Fabrics. And if we look at Joann's, also looking okay in the short term as far as the PMO goes. But I have to tell you, with that price action, and look at the 50-day EMA is just so far below the 200-day EMA. This has been a stock that's been under pressure for some time. If we look at the weekly chart, you can see it is also down near new lows. And if we go to a monthly, which honestly won't be much here, we'll just stick to the weekly chart. But Joann's Fabrics looking pretty ugly as well. Next up, the Container Store.
It's a penny stock at this point.
Yeah, pretty much. The Container Store, we're looking at low prices as well, near all-time lows, I'm imagining. Short term, we do see a PMO surging above the signal line, but nothing here underneath the surface would even appeal to me whatsoever. The weekly chart, you can see again, we're looking at a stock at new lows or close to its all-time lows. And if we look at it on a monthly basis, you can see also, like I said, these are all-time lows that we're talking about for the Container Store. And finally, the last one is Petco. And again, another chart with a huge decline. PMO is really uncertain as to what it wants to do, so I wouldn't be interested in this in the short term. If we go to a weekly, we can see all-time lows, again, starting to be hit for Petco Health and Wellness Company. So with all of that, we have the poll going on right now. And if you click on polls, you'll be able to see. But currently, Joann's Fabrics is winning the auspicious award of the next to file bankruptcy. And if we wanted to look real quick, I will update this. And currently, Big Lots, the Container Store Joann Fabrics. Also, the Seeking Alpha crowd seems to agree so far with what everybody else is saying in the room that Joann Fabrics is the one. I voted on the Container Store. I don't know too many of those stores around. I don't know if they have the kind of following that, say, Joanne Fabrics might have, but we'll see. I wouldn't want to win that. I wouldn't want to win that award. That's for sure. All right, so let's get to our sectors. We talked about utilities. I don't know, did we look at the real estate sector chart? I don't think we did yet. We talked about mortgage rates. Okay, so this is the update of all of the sectors all on one page. And I know this is a bit of an eye test, so I'll walk us through it a little bit here. Comm services look like we are getting a PMO surging above the signal line, but I have to say nothing here in the price performance impresses me here. It hit overhead resistance and struggled. We've got, sorry, hold on a moment. All right, sorry about that. A little bit of stuff going on here in the background. All right. So Staples, we did look at Staples, and PMO is pretty much in decline. I think we saw that it was starting to turn up, but really with this kind of price action, this isn't the sector that I would be interested in. Energy, of course, is surging now that we've got crude oil back moving higher. And with the war, this could be goosing this particular sector somewhat. I still see some upside potential here. Financials, I think, look very interesting. Nice rising trend here, but hasn't gotten above the 50 and 200-day EMAs. But we do have a PMO crossover that is occurring as we speak. Healthcare really making a nice move here. You can see that OHLC bar really popping up today. PMO is on a buy signal and rising pretty strongly here. So I like the look of healthcare. Industrials also have a PMO buy signal, but price is stuck beneath the 50-day EMA, unlike healthcare, which is above its 50. Materials not doing a whole lot, nothing interesting me there. We do see a death cross that is getting close to coming together. We're just a couple of tenths of a point away from a death cross on materials. I'm not really too excited about that area. Real estate, we have been talking about. We have a flag formation here. I do like what's going on in the real estate sector itself. Despite what's going on with mortgage rates and the housing market in general, XLRE as a sector looks pretty good. Technology continuing to do well. Do see a little bit of a top here on topping action. I was considering the fact that we would see some more rally this week, and I was really thinking that would come off the back of technology. Still could, but it looks like healthcare is really the one taking charge here. And utilities was definitely a sector that I think you should watch. I talked to our subscribers about this on Friday, that I like the way utilities were shaping up. We talked about the utilities chart, so we're in good shape there. Thank you to everybody taking the poll. That's kind of a fun little thing to do. All right. So let's go, and I want to talk a little bit. I'm not going to go into detail here, but I had a question about asking me how I select my stocks. Now, I've done presentations. I could spend an hour or two talking to you about how I select stocks, but there are a couple of ways I do it. One of the ways is finding a sector and then drilling down. Most of my stock selections are made from my exclusive DecisionPoint scans, which you will find the diamond picks that I make from my exclusive scans on our website. That's one of the newsletters that we do sell, which is DecisionPoint Diamonds. So I normally will go through my exclusive scans and run through and look at the possibilities through there and pick from there. But a lot of ways I've sometimes done it, if I'm not happy with what's coming out in the scans, is I'll start with a sector, move to an industry group, and then move into what stock symbols look good. So let's pick a sector, and I should have had a poll going for that. But I'm going to have to say I want to look more closely at healthcare, just because this rally is really pretty extensive here. But But I'm going to go to our under the hood chart list. And you can get all of these indicator charts if you are a member of DecisionPoint.com. These all come as part of a membership. So we want to look at healthcare. There it is. All right. Don't want to spend too much time here, but I'll go through the healthcare sector. I like what's going on under the surface. We did lose some participation, but let's just say this is the sector that I really want to go to. So then I'm going to head over to my dashboard. I'm going to go to my industry summary. So now I already know I've got a strong sector in healthcare. And now what do I want to do next is I want to go through and see which industry groups have the best looking charts. So going through here, I don't like medical equipment. Biotech's looking kind of interesting, but not doing anything superb. Healthcare providers look very good. We've got a nice little breakout here. Looks like it's getting ready to break out above this high as well. Medical supplies, well, trying to make the turn. Pharmaceuticals up quite a bit. I'm going to pick healthcare providers. And now I can go down here. And this little button is going to bring me all of the different charts within that industry group. I like to sort it by the stock charts technical rank. It brings those stronger stocks to the top. And then I can just hover over the symbols and look and see which ones look interesting. And for me, Molina Healthcare sticks out. Really nice rising trend, strong rally going on. It's a little on the overbought side, so maybe we can find something a little less overbought. Well, I don't think Cigna is going to be less overbought, but certainly a nice little rally, a little parabolic going on there, though. And just peeking through here, there's Acadia Healthcare, looks also really great on a really strong rally. So, and it's not quite overbought yet, so that looks good. So that's pretty much how I do my stock picking if I'm not using a scan. And we've gone through those sectors enough. I think it's time to throw in as many symbol requests as we can.
Yes, TPR.
TPR. And currently, Joann's Fabrics is definitely leading who's going to file for bankruptcy next.
Yeah.
All right. That'll make me sad because I do actually buy stuff from there, but I don't go brick and mortar. I don't walk into their store. I don't walk into any store really anymore.
Yeah.
I'm surprised that brick and mortar is still surviving out there without, well, I can see how they could survive without me, but I'm sure there's a lot of other people. All right, Tapestry, clothing and accessories. We're talking retail. And I think that this is going to continue to be a little bit of a difficult place to be. The first thing that I'm noticing, not only are these EMAs configured poorly, so we know this is a beat down stock, but I noticed right off the bat, this relative strength line of the stock, which is TPR, again, Tapestry. You can see that the relative strength of Tapestry against its industry group, which is starting to surge relative strength wise, and it is starting to surge lower. So if I'm going to pick from this sector or this industry group, this is not the stock that I'm going to be picking from. And so I will tell you just straight out the gate, because of this, I know that there are better choices out there in this area. And I would be careful, even though we're seeing some great outperformance in this area, I would still be very, very careful with retail right now. So I'm going to end this one discussion on this basically based on that relative strength line.
And EP.
Another one, this is NextEra Energy. You had NextEra Energy, not Partners. I think it was different, but we looked at NEE. This is similar. Multi-utilities, I was looking at going into this week. You can see that they're starting to outperform. This one's really beat down though. And knowing what's gone on with the utility sector and knowing the strong rally that has occurred there and not seeing it on this utilities chart, this particular utility, that tells me that there are probably better choices out there. And I hate to be talking about better choices without the time to go and help you find a better choice. But
the weekly on that.
Yeah, we haven't looked at any weeklies yet. Oh, let me get the big one. There we go for everybody. That's pretty darn ugly.
Yeah, definitely. And I'm trying to
I mean,
monthly to
yeah,
see.
see if if we're at new lows or not. Well, it could go lower. So it's not like we're at all-time lows or an area of support where we could get the turn. Really don't see that here. So I would have to say we don't need to go to a 5-minute chart there. I'm not a fan of that NextEra Energy Partners, but I think that multi-utilities do have some choices within.
Okay, let's go to Nike long.
Okay. All right, footwear. Well, we're looking at an industry group that is performing well, so that's good. Discretionary is performing okay, certainly not as well as some of the others. Nice rising trend here. It looks okay. I don't see anything terrible about this chart. Certainly making a nice move out of those lows. And RSI positive. So everything's going well here, but what's going on the weekly chart? And again, this is Nike, NKE. I know it's hard to see these symbols, so I'm going to try and talk about them. What do you see here, Dad?
I see it's in a downtrend. I'd like to see the monthly chart on this one.
You bet.
Ugh. Yeah, that's really ugly.
Yeah. Although, I mean, I know what we're going for here. We're trying to find new momentum. We're trying to find stocks, to add to our portfolio as we go into a nice little rally. Nike, I'd say on the very short term, has a pretty decent chart. But past that, not so much. I'd be careful with this one. But let's go ahead and look at the 5-minute chart anyway. So this is Nike's 5-minute candlestick chart. I just wanted to talk briefly about these. These are for your entries and exits. These charts are not for you to decide if you want the stock. The 5-minute candlestick chart is to figure out where to enter and where to exit. An entry is when the PMO has a positive crossover combined with a positive RSI. So back here was our last buy point on the big candlestick here. The sell points are when the PMO turns over. So anytime the PMO turns over, that's a sell point. Right now, we're not at a buy point. And I would say I don't know that we're going to get a much better buy point, though, today, because the PMO is headed lower, but price is moving sideways. So even if the PMO continues lower, price is probably going to stay on this sideways movement here. So maybe you can try and catch it the lower end of this little trading range. But overall, I don't know that you're going to get a better buy point than what we have right now.
Okay, IWM.
And the 5-minute charts, if you have time to watch them, can really improve your performance just on the front end. It's nice to get that extra 0.25%, 0.5% on just buying in at the right time. All right. So this is the Russell 2000 IWM, and we've talked about how the indexes aren't seeming to be too concerned about the war. But I have to say, if you look at relative strength of IWM to the SPY, this is not necessarily the index you want to be a part of. You can see that it's relative strength-wise, it's continuing lower. So I don't know that I would be shopping small caps right now. I think you're going to be better off in the larger caps just based on looking at this relative strength. We are getting a second bottom coming in here, but it's still really early to start talking about this as a double bottom. PMO is turning up, which is a good sign, but it had previously topped beneath its signal line, which is especially bearish. So I think there's a lot of muck for IWM to work its way through to the upside. I think you'd probably be better off in larger caps, but here's a weekly.
Small caps are doing bad, and that's what the reason there, right? You've got the all-time high in 2021, and it's basically consolidating, but I think it's going to break down out of that consolidation there.
Yeah. It's certainly, when we have the SPY, which came up and at least attacked its all-time highs, we really didn't see any of that with IWM.
Okay, FXN.
All right. First Trust Energy. So this is like XLE, basically. Similar. PMO buy signal. I mean, energy right now, I think looks great. I think you will see some follow through. The big problem is, it's already made a 10, 11% gain out of these lows. So it's hard to say how much more upside potential there is. PMOs on the buy signal. I mean, I like energy, so I have to say, I think we're going to be okay here. Let's look at the weekly. Weekly is very strong. You've got the PMO surging above the signal line. You've got a really nice scooter going on here. So, I mean, we know that energy has internal strength. We know crude oil is likely to rise given the war in the Middle East right now with Israel and Hamas. So I would be expecting this particular fund to continue higher. And if we go to a 5-minute candlestick chart, this is the buy point. We have a PMO crossover with a positive RSI. So we had a prior one right around this area. We're getting a second one. It looks like a pretty good buy point here. If you wanted to wait it out and see if you couldn't get down to these lows, you could. But the way the PMO is acting, I think it's time for price to start making its way up.
Dollar WTIC.
We have a chart
below
for
the broken trend line. Give us any indications is the question.
Yeah, I think we have one here. There we go. Double bottom. So gotta like that.
You've got a rising trend and it's broken below that rising trend. It's trying to recapture it. You see off of the June low there. Yeah.
Yeah.
So
it looks pretty healthy. PMO's turned up. We have the weekly for this one as well. And PMO's decelerating on the weekly chart, the weekly PMO, but RSI is positive. I mean, it certainly looks like it could go much higher. And given the war, I would expect that it will.
Okay. Does PDBC look okay to you for a long with a buy stop around 1551?
Okay. All right. Not sure exactly about the stops and all of that. You can figure that part of it out for yourself. But I will say that this looks pretty good. The PMO is turned up. Stochastics are above 50, which is a good sign, now in positive territory. Commodity strategy, it should do well. It's going to include crude oil in it. I like commodities right now, moving toward the upside. And got some nice, decent upside potential here of about 3.5%. I would be setting a stop at this point. Probably there's a big gap right in here. This is the support level that you want down here at that 1450 level is what I'm looking at as a stop level.
Okay, we've got about 9 minutes left. UNH.
All righty. Healthcare provider. I did show you that I like healthcare providers. This looks like a good one. You've got the rising trend in relative strength of, this is UNH, again, United Health. So you can see that rising relative strength against the group. The group is outperforming pretty much, and it is outperforming the SPY itself. Everything looks good here. The only issue is the PMO is now overbought, and it has had quite a run. This is a filled black candlestick, which is a bearish one-day formation. Suggests we could end up with a pause coming on here. But I have to say, I like the group. I like the sector. And this looks pretty good. Weekly chart, looking very healthy. No pun intended here. UNH. I like it. Let's go ahead and look at the 5-minute chart. The problem is, I do want to point this out. It is at overhead resistance. So we really are going to need a breakout to all-time highs. It does have a lot of internal strength based on stochastics. Here's our 5-minute candle to try and determine an entry or exit. And we're not at a buy point yet. The PMO is still in decline and price is in a declining trend. So I would hold off if you could.
STRO.
Sutro Biopharma, stuck beneath resistance at the 50-day EMA, which, you know, I'm getting ready to get into a beat down stock here. Kind of want to see it get above that area of overhead resistance. This, even when it's gotten above the 50-day EMA, it still hasn't been able to get itself going. So, I mean, we've got a pretty good setup here with the PMO. I know this is a low price stock, so position size wisely if you do get involved in it. And I'm sure the reason we're looking at this is the upside potential is pretty incredible here. If it can get to this level, it's a 27% gain. But, you know, to the downside, where would I want my stop? I'd want my stop at least down to this level, maybe under this level. And that's 19, that's 11 and a half, 10% stop on there. So you need a mighty big risk appetite to be interested in this one. I'm going to pass on doing an entry and exit on this one. I would just warn to be careful. The chart does look pretty good, but that's a lot of risk.
HIBL.
And this is a 3 times leveraged on the S&P 500. I feel bullish in the short term about the S&P 500. I did go into this week feeling neutral. I thought we might see a little bit more follow through on the decline before we got some rally. Seems to be it might be going the opposite way, which doesn't make me happy. I'd prefer that we got the decline first, not second. But right now, I like the look of this. You've got the PMO surging above the signal line. I mean, the technicals obviously look pretty good. Stochastics have topped, though, before getting above 80. This is leveraged on the S&P 500. I don't know that I'd want to go leveraged here, but I could certainly see, you know, getting involved in it. It's just not my cup of tea.
Okay, the next question is November tends to kick off the seasonal uptrend overall in overall stocks. How do you view that this season? Well, I would say we've gotten off to a good start. We actually had, can you put up the SPY chart?
I can do that. The 5-month or the 1 year?
1 year would be better. Okay, so beginning in May, it was supposed to be a negative seasonality period, and actually it was up for that negative seasonality. So potential is for it to continue higher, and that's really what we look like is happening. But it's still, we've got that declining tops line from the August top, and needs to get above that. But right now, I'd say bet on positive trend for the next 6 months. Okay, Planeteer, did you have a comment?
Oh, no, that pretty much covers it for me.
Okay, last word for me then. PLTR.
All right. I don't like the way it's topping out right now. I mean, the market's having a great day and it's just kind of continuing lower. Does look like a hammer candlestick developing though, which does tell me we could see a little reversal here. PMO rising, stochastics are still above 80. They did top though, and we are seeing a little bit of underperformance seeping in on Palantir. I think there are probably some better choices, but this is sitting on some important support here. You can see touch, touch. These are touching. That's kind of touching. So we're in a pretty good support area, and that does look like a hammer. So I think that there is some positive outlook here. I just don't know that it's as positive as some of the others. And weekly chart. Well, the weekly PMO is topping beneath its signal line. So this isn't really the strongest that you could find, again, in this area. This is in software, and there are plenty of choices in software. I know this is a big name, though, that everybody likes. I think this is an interesting support area. I just don't like the way it's acting. I really don't. 5-minute candle real quick. Looks like we're at a sell point. PMO is turned over. I wouldn't be looking for a buy point here for a while. You do know the last buy point came in at about what level? 1736, and we're at 1733. So if you wanted to get involved, you could. I don't know that you're going to see, you might see some lower prices though, if you can come watch and wait.
Yeah, we've got about a minute and a half. OKTA.
All right, OKTA. All right. Pulling back, but this one at least is acting better than Palantir, right? It's having a huge rally on a nice rally day for the market. I like that. This could be a flag formation. PMO is surging above the signal line. It looks like it topped and then it turned right back up, either bottoming above the signal line or whipsawing into a buy signal. Stochastics have turned down, which I don't like because they do tend to lead. But I do like the breakout here on this nice rally. I think that this is a better choice than Palantir. It does look like it's at least trying to start outperforming here. Weekly looks more healthy. It has got some big overhead resistance to deal with, though.
Yay, 30 seconds.
30 seconds, and the 5-minute PMO, you're not going to get much better buy point here. PMO's been in decline. Price has been rising. So I think you're kind of stuck with where we're at now for the buy point, unless you have time to wait around and see if this declining PMO will do something for us. All right, stopping the share. Let's go ahead and say goodbye. I appreciate you all for coming. If you want to join us live in the trading room, there are links at the bottom of the YouTube video so that you can do just that and join us live on Mondays at 9 a.m. Pacific, noon Eastern. With that, I'm going to wish everybody good luck and good trading.